It's about that time of day again. My name is Joseph. Tuesday evening, August 7th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish with a spike and range pattern tonight, and that tells me to focus on buying opportunities using seller failures down at support levels tomorrow morning. The S&P is also bullish, but this time with an overshoot of that major bull channel we talked about in last night's newsletter. That tells me to wait for an overshoot in the opposite direction before looking for more buying opportunities tomorrow. The big question right now in the S&P is, will we get another one of those overshoot reversals that we saw last Friday? The Nasdaq is also bullish with a spike and range pattern of its own, and that tells me to look for buying opportunities below the range lows using that 2-try rule tomorrow morning. And don't forget about gold. The yellow metal is bearish with triangle pattern tonight, and that tells me to focus on buying failures to sell off the highs of the range tomorrow. And of course, last but not least, we got the euro. The 6E is bullish with a flag pattern tonight. Those flags can be tricky. Flags tell me to look for buying opportunities using the breakout pullback pattern at the high of that flag tomorrow morning. And I'm counting right now on the euro. I've got 3 pullbacks right now, which means we might be staring down the barrel of a failed flag here on the euro. Could be a big selling opportunity tomorrow on the euro. I'm going to go over all this stuff tonight on the video newsletter. I got a great newsletter in store for you guys and gals tonight. Another big day of opportunities tomorrow. Before I jump in and put the plan together in tonight's video, I got to remind you, if you're here on YouTube watching me this evening, you can find a detailed description of the entire trading strategy written out on my blog right here at sidewaysmarkets.com. I'll leave all the links, the description of this video. Also, if you have any questions about anything covered in the video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing and hit the bell icon so you get notified every time I publish something new. And if you really want to stay in tune with everything we do here at School of Trade, head over here to sidewaysmarkets.com. This is where all the action happens. Our trading blog is where everything gets posted every day. And make sure while you're here, you join our mailing list. Give me your name and your email address, and I'll shoot you an email every evening when I publish anything new. If you're on social media, you can follow me on social, the lower left-hand corner. Follow me in the lower left-hand corner. How about some charts for tonight? Nice and easy, right? All the charts from tonight's video, have them ready on your computer for tomorrow. Grab those charts and be ready for tomorrow. And speaking of tomorrow, how about a free pass? Upper right-hand corner, if you're not a member here at School of Trade, I got a great free pass for you. Come join me as a guest in the trade room and watch as we execute the same strategies we talk about every night on our newsletter. Grab that free pass in the upper right-hand corner. And if you have any questions, you can always call me in the office, send me an email, or you can always hit me up on live support on the right-hand side of the website. Boy, it's great to be back with you guys and gals. Another big day here today. But of course, as always, we're only as good as our next trade here. So let's get ready for Wednesday's session. Tomorrow's hump day, Wednesday, the 8th of August. And of course, anytime we talk about a Wednesday, we have to talk about the weekly inventory report. If you're a crude oil trader, don't forget tomorrow's a small window for us tomorrow, right? All those oil traders out there. On Wednesday mornings, we have inventories every Wednesday morning at 10:30 Eastern time. This will only affect, right, the crude oil complex, right? So the Brent, right? You got, of course, the light sweet crudes that we trade, right? And of course, my cutoff is going to be at 10 a.m. Eastern time, 10 a.m. Eastern time on Wednesdays for oil. Doesn't affect anything else outside of the oil complex, right? But as far as crude oil futures, my cutoff on Wednesdays is 10 a.m. Eastern time because it's just not reliable any point after. So if you're a crude oil trader like I am, make sure you get to that early tomorrow. And of course, tomorrow morning, we'll be in our trade room as of 8 o'clock Eastern time. times. We'll get those first 2 hours on oil tomorrow, and of course, we'll be trading everything else right in between. No major news other than that weekly inventory report. No major news tomorrow, right? And of course, we got some big news coming for the rest of the week here. We get inflation numbers coming on Thursday and Friday. So currencies, right? Dollar, euro, right? We should see currencies and metals, gold, silver, copper, right? Those will be big market movers, right, for the rest of the week. But for tomorrow, though, right? Tomorrow, early in, early out. If you're an oil trader, everything else is pretty much wide open for tomorrow. All right, let's jump right in. Got the intro out of the way, checked our calendar here. Let's put these charts together and let's get our plan put together here for tomorrow, Wednesday's trading session. Now, we got crude, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Starting off tonight with oil, crude is bullish with a spike in range, a spike in channel, a hidden channel, and why not just toss in that measured move on top for good measure? Now, wait a second. I know what you're thinking right now. Who is this bozo with all these trend lines everywhere, right? What are you, new to this? Is this your first chart? Did you add every single indicator onto this chart, right? Because look at all these cool colors. I know. I agree. There's a lot on this chart tonight, right? It does look like I've got a little bit overboard on this, but there's a reason for my madness, so hear me out. First of all, let's break it right down. The first thing is the spike in range. The spike in range pattern, let me get that on here right here. This spike into a range, right? Now that spike in range, I'm going to take the size of that range, I'm going to bring it down, I'm going to bring it up, right? That creates support and resistance. Spike in range is the most important clue because it tells me, first of all, momentum is bullish, right? It's a bull market into that spike in range, so I want to buy, and I want to buy low, right? I want to buy low below that range, and I want to use support levels below that low, right? Support levels, right? Support levels, right? So I know that range tells me stick to the buy side, don't buy high, buy low, right? And buy using support levels. I can also use this larger spike in channel pattern. This is right from last night's newsletter. This is not new, right? It's the same spike in channel pattern we had last night, right? Mark up those highs, mark up that low, and boy, is that a beautiful level of support there. Now, that level of support also lines up with a hidden channel. If I draw that trend line off the high, it lines up beautifully at that low, and that trend line down here, right, is a great level of support. And again, why not? Right? And again, we're bullish, right? I want to find support levels. What else can I find for a support level? If I measure this level off the high, that level down, it all lines up in this area between 68.80, right, and 68.50, and that's going to be our sweet spot here for tomorrow, right? That's going to be our battle zone. So the bottom line is, again, I know it's, I kind of laugh myself when I look at this chart right now because there is quite a bit on there, and it's not really my style to clutter up my charts. I'm a little bit OCD about my cleanliness of my charts because I do believe that a clean chart is a more effective chart, and the more I put on my chart, the more voices in my head, right? And you can cue the jokes now about yes, I do have voices in my head sometimes. Every time I add a new indicator, every new chart pattern, everything I put on that chart is like putting one more voice in the back of your head. So I like to keep things, right, as simple as possible and really the most actionable as possible. But tonight, I wanted to make sure I really illustrated for you the low of that spike in channel, the low of that range, the measured move down here, right? And again, look closely. You've got your spike in range. If I take that range and I project it down, that's support as well. So this whole area down here, right, that's going to be our spot to look for, right, the most reliable buying opportunities. Now, whenever we're looking for buying opportunities in a range, there are two basic elements. Let's pretend now for a second that this is that range, right? And again, I take that range, I can bring it down, I can create support down here, right? So let's just say that's my support level. What I'm looking for here is I'm looking for the 2-try rule below those lows. Here's how it works. I want to see the market break below the range. I want to see those sellers try to sell that pullback, right? Again, this will be a first try, right, outside the range, second try outside the range, and I'm looking to buy into that failure, right? I'm looking to basically buy once I see those sellers, again, one try, two try, call this the two try breakout failure. Once I see that second try fail, I'm looking for that buy as we go higher. Now, as we go higher here, I don't want to chase after it, right? You don't want to trade the middle of that range. What I'm going to look for is, I'm going to look for a chance here now to buy that pullback towards that low. So the key here is I'm buying off the low. I'm really trying to buy before we get back into that range, because once you get back into that range, it tends to get all chopped up. And then if I can't get that, well, shouldn't say if I can't get that, if I have the opportunity to, I'll look to buy that pullback, because that's going to be the most reliable. Now, from there, right, from there, what do we do up here? Remember, the market's bullish overall, right? The market's bullish going into that range right now. So I don't want to sell off that high. All the selling I want to do is going to be taking my profit off my long positions. What I'm looking for now is I want to see a strong break higher, right? Now, that's your cue to say, Joe, how strong? How strong does it have to be? Strong enough now to get that moving average up above the high of that range. Okay, so it all depends on what that moving average looks like, right? That's the key here. Sometimes it doesn't need to be that strong, just needs to be strong enough to get that moving average above. If I can get that moving average above, then I can look for a one try, two, right? What I call a two-legged pullback, right? One, two, a two-legged pullback into that rising support. So again, I'm looking for those buys on the failure, two try failure, buys on the pullback, and then buys off of what I call a fake out breakout pullback, the old FOBOPB, right above that high. You're going to see a lot of ranges here tonight. This is going to be a good, right, a good kind of blueprint for us to work on. Now, are you here for the first time today? If you're here for the first time today, the fake out, breakout, pullback, the two try failure, right? All of these patterns, I'm sure this went way over your head. So before you give up on me here tonight, if this is your first time here with me, I want to make sure I give you, right, a shortcut. I want to give you a chance to really learn all of this. I know there's a lot of terminology in day trading. We all kind of make up our own language when it comes to day trading, right? I've got terms that are probably used elsewhere in different ways. So the bottom line is I want to give you a shortcut. I want to give you a free trading course in the upper right-hand corner. You'll see a little pop-up right here. Pause the video, grab that free trading course, grab the pop-up. I'm going to also put the link in the description of the YouTube video tonight, right? So grab that description and the link is right there, right on top. And that will take you to my website at schooloftrade.com and you can register for our free trading course. That free trading course will teach you all the terminology, it'll teach you all the technical analysis, but more importantly, it'll show you real examples, right? Right now, I'm just drawing the screen right now. I'm going to show you real examples of the patterns, though, that I'm talking about tonight on the video, all right? Because I can't go into a lot of detail about this because I keep the video short, right? But I want to make sure if you're here for the first time today, I want to make sure you get that deep dive that you need to make the most of this. So there's my range, right? There's my range right there. So now we look for that. Let's do a different color here. There's my range right there, right? I'm looking for that one try, two try, failure, pullback, back in, fake out, breakout, pullback, right up to new highs here, right? Failure, pullback, and again, fake out, breakout, pullback, right up to new new highs here. Okay, relatively simple there. Now, tomorrow's inventories. What does that mean? Early in, early out. It also means, right, that we may just get stuck, right? It may just kind of sit and chop sideways. If we sit and chop sideways tomorrow, trend line coming down, trend line coming up. Remember, this is a range. Wait for it. One try, two try, failure, pullback, right? Fake out, breakout, pullback up to that high, right? So if we go sideways, wait for it. How do we break out of this range? What does a breakout look like? Well, we talk about this term, and again, you'll learn this term in the free trading class, the 1, 2, 3 reversal, right? And we always have fun with this and say there's an exclamation point at the end, right? It's 1, 2, 3 reversal, right? It's not 1, 2, 3 reversal, right? It's 1, 2, 3 reversal, right, on strength. It's got that exclamation point. Well, the same thing applies to the 1, 2, 3 breakout, right? That strong breakout. And the reason why I put that exclamation at the end is because that's the personality of it, right? So how do we break out? 1, 2, bam, breakout, right? 2-try rule. 1 try, 2 try, failure back in, right? We already know that's our buy, but what if we went 1 try, 2 try, and breakout, right? Strong move lower. That's going to tell me we have a successful breakout of this range. Then we'll look to find that new channel. I'm going to draw off those highs. And at that point now, we can probably use a lot of these support levels as resistance now, or what I call as reversal lines that we can sell off that high. Same thing will be true to the upside, right? Strong move up, pull back, breakout, right? This now becomes a bull trend, right? Instead of a range, bull channel, buying off the low of that channel, right, as we get outside of that range. So I never trust breakouts on the first try, because most breakouts in the first try will end up failing going back into that range. But if they can hold that pullback and run, well, now I respect it, and now I'm going to follow that trend by selling at the high of that new channel. Looking good there on the crude, right? And again, like I said earlier, be careful with how much you put on your charts. Every indicator, every pattern you're highlighting is like another voice, right, in your head. I got enough crazy voice in my head already, right? I don't need to be making the problem even worse. I'm having fun with you, obviously. Let's keep going. How about some S&P? S&P is bullish with a channel overshoot, a spike in range, and a key reversal line on the chart this evening. The channel overshoot tells me this market is likely considered to be overbought by many traders, and at this point, right, it's likely in need of a pullback to attract some fresh buyers into this market. And the spike in range may be the sign of that exhaustion starting to settle in here, telling me to focus on buying opportunities using seller failures down below the range low, where there's also a convenient reversal line at 53.50, right, waiting at the low of this big bull channel. Got a lot of support levels lining up. As we zoom in on this, actually, let's zoom out first here. So I want you to see the big picture on this chart, right? It's very, very easy to see, right, that we are trying, nothing you can see all the way back here. Yeah, you can't go back far enough, right? But we're trying to go back, right, to those all-time highs again right now. We broke back to the monthly highs, right? But you can definitely tell this is feeling like a bit of a short covering rally right now in just the lack of any real pullback. We talked about this last night, right? So this is the big channel, right? This is the channel we started off the week, we ended the week last weekend, and we're now way above that channel. What does that tell me? Well, it tells me, first of all, that we've gone above the top of that channel, probably a pretty good place to start taking some profit. So usually we see buyers stop buying and take a good chunk of their profit right up above that high. It also tells me, right, that I can measure the amount of this overshoot, and the amount of that overshoot, right, will line up with the amount on the opposite side, right? What I like to do is I'll take the amount of that move right there, show you real quickly here, take that, again, I'm just measuring it, put a vertical line on here, just measure, right, the size of that move above the channel high to the highest point. Then what I'll do is I'll take that same rectangle now, I'll bring it down here, and I'll basically, once we get back down below that channel, I'll lock in that overshoot, right? So I call this an overshoot, an OS, right, an overshoot, and I'm looking for an overshoot on the opposite side. So normally what happens is when we have this momentum, right, that swings a little bit out of balance here right now, it's swung into the overbought territory. It's not just going to swing back to the middle, it's going to swing into the oversold territory as well. So I'm definitely watching this area here around that 28.46, 28.47 area. It's not an exact science, right? We're not going to be counting tick for tick on this, but that gives me an idea, right, that we may be seeing a relatively strong move down. And we'll talk about that right here in just a moment. So that's a big clue, right? That big clue tells me basically don't be surprised if we see this market kind of hesitate up here, right, and give me a relatively right deep pullback. So we'll talk about that here in a moment. Then next thing is I've got this beautiful reversal line, right? This is a prior level of resistance that has not been used as support. If I could guess, out of all the stuff in this chart, I would guess this area at 53.5 tomorrow will probably be the most important level, right, to keep an eye on. Because what happens a lot of times is when we see these trending markets and they pull back, right, and they hit these, right, they hit these reversal lines. If we see there's one reversal line here that never gets touched, like that one, it's almost like unfinished business. And what oftentimes happens is, guys, a lot of times it'll do this, where it'll come up, it'll quickly pull back, but then it will give some separation. What you want is you want to see that good separation, right, away from that reversal line. And oftentimes it'll come right back, kind of sneak in, and bam, that'll be the spot again. So you're watching those prior levels of resistance, and the fact that we have that prior swing and nobody's come back to get it yet, I'll bet there are a lot of buyers with their orders hanging out right around that 28.54 area tomorrow. And just for good measure, you can also see it lines up right with the low of that channel, right? We're always trying to find areas of confluence, right? A confluence area being, right, confluence area meaning we're trying to get a couple of these levels to line up in the same location. So that's a really, really good spot to look for tomorrow. And then again, I think the big clue, this is just like on oil, I think the big clue right now is a spike in range. We get a bull move up, right, into a trading range. I'm taking that trading range. I'm copying and pasting it down for support. I'm copying and pasting it above for resistance. You guys are experts on this now, right? You guys are experts in on these trading ranges now. You know the plan, right? So we're bullish. I'm looking at my support levels down here, support levels down here, support levels down. This whole area down here is a beautiful spot. I would love to see us one try, two try, failure, pull back, and go right into that fake out, breakout, pullback above that high, right? So it's one try, two try. Again, it's the one try, two try for those sellers. I'm buying into the loss of those sellers, right? I'm buying the pullback to avoid buying high, and then I'm waiting now to get through that level of resistance, get that two-legged pullback, get that moving average up above that high, right? And let's keep this party rolling, right, as we go higher. Now, where would that target be? If you go back here, you'll notice, right, I've got these kind of measured legs here right now, and it looks like they kind of overdone that a little bit, right? So you take that leg, let's just say, for example, go back in here now again here, Joe. Let's just say, for example, here now, we do get that deep pullback, right? We get that deep pullback, one try, two try, right? You get the failure into that strength, again, strength to pullback, right? And then, of course, pullback up, fake out, breakout, pullback, up from there, right? Where's your target going to be here, right? Your target's going to be now up at that, just the way it looks right now, 28.74 with that next measured move, right? So again, measured move, two try pullback, right? Two try failure, I should say. Two try failure, breakout, pullback, fake out, breakout, pullback, right above those highs. And again, I've got probably at this point, I probably got thousands, if not a couple hundred examples of these exact patterns on that free trading course, right? So if you're thinking, no, I'm not going to learn anything there, you are. You're going to learn a lot out of that free course. Grab the information icon in the upper right-hand corner, learn a ton there. And again, if not just for those good examples of those real patterns, which you can model your own trading after, right? So grab those there. All right. Last but not least, right? We talk about buying low. We talk about buying high, right? We're waiting for that fake out, breakout, pullback. If we go sideways here tomorrow, the plan stays the same. One try, two try, failure, pullback, and go, right? Plan stays the same. How do we reverse? What does the reversal look like? Strength, pullback, strength, 1, 2, 3, reversal, right? Strength, pullback, strength. Strong move down. Pull back to the moving average. Got to pull back to the moving average. 3, strong move through. That strong move through is what tells us, this market has turned bearish. I'm going to draw my new channel, find my new channel, sell off the top of that channel, and we're looking good, right? And we're looking good to the downside. Now, when we do get that move to the downside, right? If we do get that strong pendulum swing, we may easily see this market turn bearish, right? As it turns bearish, how do we turn bullish again? Great question. I'm waiting for a double bottom or a higher low, a strong move back up. Now, what do we do in that situation? We buy that? No. We don't buy high. Buy low. Draw a new channel off that high, off that low. Buy that pullback from there. Right? So if we do get that deep pullback, why not just buy a failure down here? Because the market momentum will be too strong to the downside. Right? You don't want to buy that failure. You want to wait, right, and buy that pullback after we get that jump, right? After we get that jump going back in the opposite direction. Really good chart there on the S&P. And there is potential, right, that we may see a real sharp correction here in the next 24 hours. We're going to find out here in the next couple hours. Let's see what we get here. Nasdaq time. Nasdaq is bullish with its own spike in range pattern tonight. We get a support trend line and a reversal line on the chart this evening. The spike in range has a bull bias. That tells me to look for buying opportunities using the 2-try rule, and seller failures below the range low. And of course, I have a key reversal line. They're at 48.25. Combine that with that rising support trend line, all coming in nice and hot, right, in that same location, down around 74.5 tomorrow morning. Now, if we don't get the pullback, the spike in range also tells me to wait for a successful breakout pullback, right, to new highs tomorrow, and we got that measured move here. So again, couple components here right now. I've got one leg, I got two legs, and we got three legs, right? If we don't pull back, okay, that measured move up here at 75.11, that's likely where these buyers are trying to go. At the same time here, I do have a trend line coming down off of these lows. Give them a look at that, Joe. There's my trend line coming off those lows. Extended line could be a trend line there, right? Mark up those lows. I want to buy off that key support, right? It's a bull market. I want to buy off that level of support right now, right? So buying off support. The big clue, though, is that spike up, double top, right? Anytime we see a double top in a bull market, we know the market's going sideways. There's my trading range. Take that trading range, bring it down, bring it up. That's resistance. That's support. And you'll notice that trend line, that reversal line, and just for giggles, right, we've got that range expansion line also piling up on top, a beautiful area, right, to look for buying opportunities. So what if price pulls back for us? What if we do go running down into that 74.5 area? What do we do there? Well, what I always like to do is I always like to wait for those sellers to try one more time. And you can see an example right here. Strong move down. Don't try to pick the bottom. The momentum is too strong. Wait for those bears to try again. Once we see that second try, we then buy on the way back in, and then there's that pullback coming off the low of that range. And once again, like I said earlier, I'm talking about these patterns. I'm illustrating these patterns. But if you want to see a lot more real examples of these patterns, right, grab the free course in the description of the YouTube video, or follow that link in the upper right-hand corner, right, and register for that free class. I'm telling you, it will not be a waste of your time. There is a lot of junk on the internet, but this is definitely not one of them. If you like my newsletter, you're going to love that free course. Now, knowing this, again, one try, two try, failure, pullback, and go, right, up above, right, two-legged pullback above that high, right, so one try. That's a horrible drawing. One try, two try, right? One try, two try, seller failure, breakout pullback, fake out breakout pullback, right? Those are the two for tomorrow, right? Now, what if we go sideways here? We keep going sideways, plan stays the same. One try, two try, failure, strength pullback, fake out, breakout, and we go. Same basic patterns. What if we go higher here? Can I sell this? Can I sell up here? You can, but you've got to be thinking not failure pattern, right? We're not looking for a failure here. If you want to sell it, you want to sell that pullback. It's not easy, right? It's not easy. It's not easy selling in a bull market, right? But if you do want to sell it, you can look for that one try, two try failure, basically keep that moving average below the range high, right, and sell that pullback. That'll pretty much be your best bet for selling, right, in a bull market. Not really my cup of tea. And then don't forget a reversal, strength, pullback, strength, right? New channel, find that new channel off the lows, pin to the highs, we're selling off those highs, right? Strength, pullback, strength, big bull breakout, right? New highs, find that new channel, use that measured move as support, buy that support level, right, as we make a run up to, oh, looky, there's the prior month high at 73.50. The S&P's already reached July's high. We're going to see if the Nasdaq's going to take its swing at this, right, tomorrow morning. Let's keep going. About some gold right now. Gold is bearish with a triangle or a range on the chart this evening. The overall trend is bearish, but with lower highs and higher lows on the chart, I know we're trading inside of a range, which tells me I want to focus on following the momentum in this market, focus on selling, but sell up at resistance, right? Bear market, sell at resistance, and sell up above the high, right, of this range tomorrow morning using buyer failures and that two try rule. Relatively easy. If we zoom out here on the gold, we can see it is a bearish market, right? Bear market going lower, but now we're seeing a couple attempts here, one try, two try to finish off that move back to retest the low. Those are higher lows. These are lower highs. Right, it's a little bit wide for a flat moving average, but right now you have to assume this market, right, is range bound right now. When it comes to a triangle, right, basically your eyes are on the edges, right, the major swings, the turning points, that edge, that edge, that edge, that edge, that edge, and that edge, right? Those are the main turning points that you want to focus on, that I'll be focused on, right, with this range. And anytime we have a range, just like the spike in range we saw on the first three charts, I'm looking to follow momentum, right? Bear market, we have very, very little credibility right now for the bulls, right? The last time the bulls had a big run was on Friday's non-farm payroll number, and that was after that overshoot reversal, if you recall, right, from last Thursday night's newsletter. Ever since then, ever since the buyers, right, every time the buyers try to hold above that moving average, they're getting clobbered. So we have no reason to trust the buyers right now, but the one thing I don't want to do is I don't want to sell low here, because this is where we start getting really difficult price action as we try to go lower. So my plan is to sell high, sell at resistance. And to do that, I want to use what we call the two try rule. So if I zoom in on this a little bit closer now, I want to go up at the top of that range. Again, focusing on the edges here, right? Get up to one of those turning points. When we go higher here, what's going to happen? You're going to see something like this, where it's going to go up, it'll pull back to the moving average. The buyers will try to buy that pullback. We're going to look for the failure, right? That's your two try rule. That failure, the bottom will drop out of it. We're not going to chase after it. We're going to sell the pullback for the way back down, right? I told you, I'm not making this stuff up, right? This is a good example right here. One try, two try, failure, don't chase after it, pull back down, right? You can see it. One try, two try, failure, pull back down. Okay, so one try, two try, failure, don't chase after it, pull back down. Now, what about the opposite side? Can we buy off the low? Yes, you can. One try, two try, but no failure now, right? Remember, it's a bear market. Take the pullback. And in a bear market, if I'm trying to buy off the low, I'm going to try to buy off that low using a little bit more ammunition. right? In other words, combine that hidden channel, combine that reversal line with that pullback pattern, right? Really lock it up nice and good. Again, the momentum is bearish, right? So you really want to offset, you want to increase your odds of success right when you go against the momentum. Oh, and by the way, don't be afraid to skip any trades that go against your momentum. Right? I tell this to all my newest traders in my trade room. We are not counter trend traders until you know why you shouldn't be a counter trend trader, right? In other words, you know that when you go with the trend, you get lucky more often. Your winning ratios are higher. Your biggest winners are much bigger when you follow the momentum of the market, right? That's one of those, and I talked about this last night, right? That's one of those small hinges that swings the big door, right? Small things make big, big, big impact, and that's following momentum of the market, right? So we don't want to go against momentum until we have a good amount of really wind at our back and progress in our trading career, because the odds are not as good. They're more difficult patterns to find. And again, the big thing about following momentum is that your best trades are bigger. Your biggest winning trades are substantially bigger when you follow that trend. You know, a lot of counter trend trades are small scalps. They make up, you know, the old 80-20 analysis, right? They're the 80%, right, that are bogging you down, where you really want to focus on that 20% that makes the biggest impact, right, in your account. All right, we'll talk about that next time. But the bottom line, though, is we want to go up, one try, two try, failure, pull back down, one try, two try, no failure, just that pullback, back up. Try to stay away from the middle, right? How do we break out? 1, 2, bam, breakout, 1, 2, breakout. Got to go through those turning points, find that new channel, or buying off that new channel. I don't care what direction it is. Right? It could be 1, 2, breakout there, strong move down, find that new channel, right? Buy or selling off that high. I don't care what direction. If we get that strong enough 1, 2, 3 breakout, it's all right. It's all hands on deck, and we're following that new trend here for tomorrow. So sit tight on the middle, right? Stay away from that middle. That's why I call it the no trade zone. Go up, back down, go down, back up. Use that 2 try rule. Use those failure patterns, right? And again, go with that momentum. How about some euro tonight? Euro is bullish with a strong bull run, a flag pattern, and a measured move on the chart this evening. The strong bull run tells me that bulls are almost guaranteed to retest the high, and possibly right up to that next measured move waiting just below that 16,600. The flag pattern, though, is the big clue. That tells me to buy the breakout pullback using the high of that channel, or look for buying opportunities using seller failures down at channel lows tomorrow morning. Now, as we look at the chart here right now, it's very easy to see the market is bullish with a nice bull channel. That is a well-oiled channel. You can see we got great rotation, low to high, high to low, right? Low to high. Nice, strong, qualified channel, as we call it here at School of Trade. And that tells me the odds are very, very good that we retest that high. The question always is, how do we retest the high, right? We know the odds are pretty good we're going to get there. The question is, how do we get there? And that brings in our flag pattern. Now, a flag pattern is one of those patterns that a lot of traders learn early in their career, but they don't really have an appreciation for it because it's relatively rare. You know, in the big scheme of things, this is kind of the same line as like an old head and shoulders pattern, where we all kind of learn about it. Head and shoulders happen everywhere, right? You see them everywhere. In fact, in my opinion, head and shoulders patterns are so saturated that you really can't use them reliably. Now, I'm sure you've got a couple arguments on that, and I'm sure there are folks out there that use them. But personally, the way that I look at charts, I don't use head and shoulders. But again, head and shoulders patterns are kind of on the opposite side, right, of that spectrum. Right? On the other side of the spectrum is a flag pattern. Flag patterns are another one of those old school patterns, but they don't happen very often. So a lot of new traders never really learn how to trade them. The most important thing about a flag pattern is counterintuitive because it's a bear channel in a bull market. And this is where traders get into trouble. This is where I get into trouble. And this is why I tell people flag patterns will usually be one of the last pieces of the puzzle that you're going to learn. And here's why. When a market is bullish and we start pulling back slowly, that creates the flag. Now what's happening is this strong move higher is basically broadcasting the momentum is bullish, right? But the struggle, right? This kind of really sleepy, right? Kind of, again, really sleepy, really mild pullback. It's not a reversal, right? But it creates this falling resistance. And it looks like the market reversed. But what do we need for a market to reverse? Remember that earlier? We need that 1, 2, 3 reversal, right? In other words, we need that strength. If you put the moving average on here, right, it'll create separation away from that moving average. Okay, now why am I telling you this? Because when you see a strong move higher and the market just kind of fiddles around a little bit, it's pulling back slowly, it's not going very far, and it's just sleepy. What's happening is buyers are telling you they're waiting to buy at a lower price. They're not reversing yet, right? But now we've got to find a way to get through this falling resistance trend line, right? And either buy it above it and go, or get below this channel, right, and buy from there. In other words, this falling resistance is public enemy number 1, or should I say the enemy of the buyers number 1, right? They don't want, right? They don't want this level of resistance, right? Gonna get through it. So when I go back to my chart now and I zoom in on this, you can easily see the market is really strong to the bull side. We barely pulled back to the moving average. It's not a range because we're not seeing a double top, right? Draw that trend line down overhead, bring it down over here. Again, what makes this so difficult is it looks like the market's turning bearish. But we know that it's not just about lower lows and lower highs that make a bear market. It's context, it's personality. This is clearly not a bear market, right? A bear market, you can find one here. Not really much example here, but a bear market would do this, right? It would jump off that, right? It would jump off that moving average because buyers will be walking away. This is not a bear market, it's a bull market. And again, I talk about this quite a bit in the newsletter, so I apologize if I'm repeating myself right now, but I want to make sure I give this to all the new traders out there too. So we draw that trend line off the high, right? The most effective way to trade this is to trade the breakout pullback. Right now, you could go Google search right now how to trade a flag pattern, and a lot of people are going to tell you, right, to buy the breakout, buy it as it goes higher. But we know better than that. I know that's what they talk about in the old trading books, right? But back 20, 30 years ago, there wasn't instant data. I mean, there weren't cell phones right? We had computers in major corporations, right, that were less technology back then than we have on our personal cell phones right now. The bottom line is things have changed. In the old days, yes, you would buy that breakout. You just simply buy the breakout right there, right? But the problem is you're buying high. And if you buy high, what happens? You have to be able to absorb a pullback. So rather than trying to buy high, I wait for that pullback and I look for that pullback coming down into the top of that range. Okay. Now again, all the old school trading books are going to tell you, oh yeah, just buy the breakout here, no big deal. The problem again is the markets are too smart for that now, right? You buy high here, especially in summertime trading, you're going to wind up, well, if you don't get stopped out, you'll have to have a big stop down here, right? You can buy up here and you've got to put your stop all the way down here, right? I'd much rather wait, right? I'd much rather wait by here, put my stop right there, right? Much less risk and a lot better reward profile on that trade. So that's what I look for when it comes to, right, a flag pattern. Now, I mentioned something earlier here. We have 1, 2, 3. The magic number on a flag pattern is usually 3. So sometimes, right? Sometimes, not all the time, but sometimes we see a failure, a flag failure. And you're going to know a flag failure right when you see it, because what it does is, right, it tries to hold this pullback and it collapses. Once you see that flag failure, draw that new channel down, find that high, and get aggressive. Get aggressive selling the top of that new channel. It's going to be a lot steeper, right? This will not be your channel, right? It'll end up collapsing. It'll be a steeper channel, and you've got to get aggressive on it, right? Because it's gonna collapse, right? It will go belly up real fast. So right now I'm watching for that breakout pullback to finish off that high. I'm also watching to see how this market reacts and if it collapses. If it collapses, I'm looking for that new trend line down, and I will get aggressive, right, to sell off the high of that channel. All right, guys? Now, one more thing I want to be ready for tomorrow. What if we go up? What if we run back up and bounce off that high? Okay, sometimes flag patterns will turn into ranges. If we see a double top of the high here, in other words, if we go back to retest the high and we pull back off that high, now this becomes what? It becomes a trading range. And what do we do with the range? You got it. We buy, one try, two try, failure, pull back, and back up, right? Same basic strategy that we talked about on the first three charts tonight, right? So if it does go back and retest the high and just go through the high, right, double tops, then we know we get a range, right? Don't be surprised if it goes sideways here, middle to late morning tomorrow, and look for that buy at the low of that range. All right, guys, last but not least, well, we talked about reversals. We talked about the potential range. We talked about the breakout pullback. We're looking good. We're looking good. And again, don't force it tomorrow on markets like euro and gold, because we got those two big inflation reports coming on Thursday and Friday, and they're definitely going to be market-moving events for us on Thursday, Friday. Boy, oh boy, we've covered a lot tonight on this video newsletter. I try to put my heart and soul in every newsletter that I do here at School of Trade, because I know you guys appreciate it, and I know it's helping your trading career, and that's all I really care about on this newsletter. If you want more information, if you want a deeper dive in this strategy we trade every day in our trade room, grab the free trial. I got a free pass. Come out and join me as a guest in our trade room. I've got beginner, intermediate, advanced classes. If you're a brand new trader, you'll love our beginner class. If you're an intermediate or an advanced trader, right, you'll love our classroom sessions. Our advanced class is our most popular because it includes all the tools, all the cheat sheets, all the checklists, and of course, unlimited time every day in our trade room. Any questions, hit me up on live support, call the toll-free number, drop me a comment in the comment section below. And that will wrap things up here for us tonight. As always, tomorrow morning, 8 o'clock Eastern time, I'll see you there. If I don't see you guys tomorrow morning, come back and see me again tomorrow night for our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And we'll see you guys next time. Adios, amigos. Bye for now.